IMF mission had to also comply with COVID-19, and this was the mission that was a virtual mission, so to say. How does that feel? Is that a little bit peculiar?
Thanks, Elena. Indeed, these are peculiar times. I mean, and we have to adapt, right? And of course, the IMF team clearly prefers a physical visit to Georgia rather than a virtual one. But the safety comes first.
Definitely. Yeah. We prefer face-to-face interviews as well, but journalism has to adapt as well, since the health is first, definitely. Now about the findings of the mission, I have here an excerpt which reads: growth is expected to contract by 5%, a slightly higher contraction than at the time of the sixth review. What caused a little bit more severe slowdown in the second quarter of 2020?
I mean, at the time of the sixth review, which is like May, beginning of May, late April, you remember uncertainty was large. And we were working under a global assumption that the shock would have a V-shaped recovery, now which is, of course, no longer the case. Yes, the contraction in demand was larger than we assumed in April and May, and the recovery seems to take more time than we initially envisaged. We were also hoping for international flights to resume sometime in July, in line with the announcement and expectations at the time. But in reality, those international flights only took place for a limited set of countries and with delay because of COVID developments globally. Now, still, the preliminary data suggests a tentative recovery in domestic demand beginning in June. We see growth in credit to the private sector remains relatively strong. It's partly supported by, of course, government subsidies on the lari-denominated mortgages. So we stopped at -5%. We didn't revise it further down.
IMF statement says that the COVID-19 pandemic's health impact has been well contained, but it has had a significant impact on economic activity. That's what we read from the statement. Do you think that Georgia currently is using well its status of a green country?
The pace of the pandemic, will dictate the pace of the opening up of the economy, right? Until the pandemic is clearly in the rear view mirror, as we say, really we cannot expect a full reopening of the economy. I mean, it is possibly safe to assume that the social distancing will be with us probably in 2021 as well. Credit of the authorities, they have proven that they have a good understanding of the epidemic so far, and also they are well aware of Georgia's capacity constraints to deal with it. So I would really rely on their judgment if further containment measures are necessary or not.
You mentioned that the uncertainty is still high. What business says is that a volatile exchange rate adds even more to this uncertainty that is inherent to this COVID-19 pandemic. NBG is selling reserves, but it has very little so to say, impact on exchange rate. Is business community's logic clear to you?
I mean, look, the National Bank of Georgia does not target a level in the exchange rate, right? But rather aims to avoid.
Of course.
Yeah, but they try to avoid excessive volatility because it also has implications for inflation. We think the floating exchange rate regime serves Georgia well. And the exchange rate is doing what it's supposed to do. It is playing its shock-absorbing role. Now, the National Bank of Georgia has been active, particularly relative to past, right, in trying to limit the excessive volatility in the exchange rate. The interventions has been more frequent, but also remember, unlike other central banks, National Bank was careful in reducing its policy rate. possibly, against this backdrop of volatility in lari and its impact on inflation. So we think this is the right approach. The best way for companies and individuals to deal with the exchange rate is to borrow in the currency they earn, right? To start with, which would be the Georgian lari for most of them. Now, we again think this recent developments and volatility also show that National Bank was correct in its efforts to reduce the dollarization through its regulatory changes. Now, of course, the businesses suffer, and the support to businesses in those difficult times has to come from the budget, and the government has been active on that front. It has increased the size of the credit guarantee fund considerably. We understand its use has been rather limited, and that the government is now in consultation with banks and corporates to find ways to increase its use, possibly by addressing some of the design issues it might have. There is also interest subsidy to small and medium-sized hotels. Now, for the construction sector, there was an extensive support package that included also this famous 4% interest subsidy on lari mortgages. And if there is a need, we believe the government would continue to provide support to businesses. There is room in the budget for that.
NBG might spend more than 200 million USD of reserves to contain inflation. So far, what we see is that it is selling 40 million USD tranches. Is this policy of selling reserves agreed with IMF?
Yes, in the program we have what we call net international reserve target, right? And that more or less is as a result of the balance of payments forecast we do. We have a forecast of inflows and outflows, and based on that we set those limits. And if you look in detail to those limits that is set in the program, it gives a lot of room to National Bank of Georgia, and the National Bank of Georgia has been using it.
And government also spending money to alleviate, at least to some extent, this COVID-19 impact on households, on businesses. So on the other hand, it is also some kind of the pressure on exchange rate.
One would argue for that the economy needs much more fiscal support and monetary support, but there are always trade-offs, and one of those trade-offs is inflation, partly driven by this volatility in the exchange rate. As long as the government adheres to the targets in the program, which they do, we think we don't see a big source of worry.
You also mentioned, and IMF's statement also puts an emphasis that in response to declining economic activity and easing inflation pressures, the NBG appropriately reduced its policy rate. What should be the policy towards easing this rate?
Very good question. I mean, it is the central bank's decision. We think so far the policy response has been appropriate. My guess is that they would be in a wait and see approach. They will wait to see how the exchange rate behaves and its impact on inflation. But we think inflation is now below 5%. We think the trajectory is the correct trajectory in the sense that it will continue to decline. It may or may not reach 3% target by the end of this year. It may take a bit longer. But we think, say, early next year, this 3% target is achievable.
One more option that politicians speak, since we're in an election period, on how to give the economy the room to breathe, so to say, and to rebound, is to decrease the taxes and, as they say, leave more money into the pockets of individuals.
The tax burden on the economy is moderate in Georgia. So we don't see a need or a macroeconomic case to lower the government's revenue. Where we see a room is that there are those VAT rebates. And if you read our program documents, we expect the government to move to an automated system. The current level of budget and the buffers existing would allow government to move to this automated system. That would be one area that we will be discussing with the authorities.
Do you see the room for recommending, for example, the contrary, for example, raising, I don't know, for example, excise tax to generate more revenue?
At this stage, we don't see a reason to increase taxes or tax rates. We think the government has the ability, to sustain a high level of deficit for some time. Of course, this has to be accompanied with a medium-term plan for fiscal consolidation.
Would you elaborate a little bit on that?
The Liberty Act requires government to bring the fiscal deficit down to 3% by 2023. So we would be careful in asking for a premature fiscal consolidation.
What will be some of the structural reforms that we need to keep an eye on?
We had two critical conditionality, right, in the program on the structural measure side. Now, one of them was the pension indexation, which passed with the supplemental budget. The other one is the insolvency law. Now, the law has passed very recently, but it has to be implemented. And what COVID does is it made it a bit more urgent. Now, our program is expiring next year, April. And if we have a new program, possibly this time, it will have some structural reform elements, focusing on state-owned enterprises and reforming them. This is an area that we haven't touched upon a lot in the current program.
Thank you so much for taking
I'll be happy to. Thanks a lot, Ellen.
Thank you.
All right, take care. Bye.